Hello students, today we are going to cover this partner's loan account, retiring partner's loan account. As we have already done that partner's capital account is made, there the payment to the partner, whatever balance comes to the partner, that is paid to him by, that can be paid in cash. Then here in this question, if B is retiring, then B by paying cash, then here it should be returned to cash 10,000 rupees, because his total balance is 90,000 here. Okay, 90,000 is to be paid to him, and this 90,000, B is the retiring partner, so 90,000 is to be paid. Out of that, what if it is there in the question that 10,000 is paid him by giving a check, and remaining 80,000 is to be paid to him in 2 years in equal installment, in two equal yearly installment, on which he will be paid that interest of 10%. 10% interest is paid to him yearly per annum. So this how we will solve this here. So first of all, making this capital account, we will show it here that it will made in the way we were doing earlier. But here, while paying the amount, if the amount that is paid to him, if it is in cash, here we will write to cash how much amount is paid to him in cash, and how much remained will be shown here to his loan account here. 80,000 here is to be given to him afterwards, so it is transferred to his loan account. Now this amount is to be paid. If it is there in the question that it is, you have to, if it is in the question that loan account is to be made, and that amount to the partner, retiring partner, is to be given in 2 equal installment or 3 equal installment, and interest is to be charged in a fixed percent, that is a given at a given this rate, and it is asked in the question to prepare the capital account. So in that case, this will be done in the way we were doing earlier. Now this loan, whatever amount is to be paid in future, an installment that will be shown here in his loan account. Now this 80,000 will be transferred to here, will make a loan account, a retiring partner's loan account, and this amount is transferred to his loan account here. If it is he is retiring on April 1st, 2019, this amount is transferred to his capital account, and next year on 1st April he will pay on 31st March he will be paid the amount. So this amount is to be paid to him, and the amount of interest on that date. So how much interest? So what is the journal entry for that? Interest is the expense for the business and for the firm. So interest account will be debited, and partners B's loan account will be credited. So interest account debit to B's loan account. So here by interest on loan account, on which date it is on 2020 March 31st. If this loan is given to him, okay, so how much is the loan? 10%. This is 8,000 on total amount. The loan will be, interest will be charged. So this will be 88,000 total. After this, this amount is there. So now 88,000 is to be paid. Half of this amount is paid. 40,000 this and 8,000 this. So total 88,000 is the total here. Here on 31st March 2020 March 31st, write to bank or cash, whatever it is, to bank we'll write here. How much? 50% of this, 40,000 rupees, because in 2 equal installment this amount is to be paid. So if we divide it with 2, it will come 40,000. 40,000 is paid here on this day, and then 8,000 of this interest. Okay, so total 48,000 is paid to him, and remaining balance on this day will be, the total is here, we will make the total of this is 88,000, and now the balance we will find out. What is the balance? Balance is now how much? 88 minus 48, it comes 40,000 is the balance. Now again this balance we will bring here in the next financial year, that is 2020, this April 1st. Then by balance brought down, though it will be 40,000, will bring here. Okay, then we will charge the interest on this 40,000 on March 31st 2021. March 31st by interest on loan, although this date has not come, but in 2021 if we are doing, if it is 18, we can take it here 18, okay, for conveniency. But here we are not on this we will not fall in this trap that the date has come or not. We are thinking that it is the date has come. So here interest on loan 40,000 for 1 year. How much will be the interest? It will be 4,000 rupees. Total 44,000 is here out of, now because it is to be paid in 2 equal installment, 1 installment is paid, this is the second installment. In this, the whole amount, the complete amount will be paid to him. So it is on 31st 2021 March 31st to bank, and a total amount, that is 44,000, this will be paid to him. This way this loan account will be prepared. Okay, sometimes it is in the question that he will be given 30,000 and the remaining at the end of the year. So in that case, if this is that, only 30,000 is to be paid, then the interest will be added and 30,000 will be paid to him, and the remaining amount will be paid at the last. If it is done, it is there in the question. If it is there that it is to be paid 20,000, if it is there in the question that if this amount 80,000 is to be paid, 30,000 is to be paid, 30,000 plus interest is to be paid every year, and the balance is to be paid in the last year. So in this case here we would have put that to bank 30 plus interest and the balance, and then next year also 30 plus balance, 30 plus interest, and the balance will be paid, whatever amount comes up in the third year, that will be paid in the third year, complete amount. So this can be done. Okay, so this way we'll take a question, numerical from your book, and then try to solve that question next time. Thank you.